has now gone live, so I trust you had access to it. Abe will offer a few opening remarks, and then he will be happy to take your questions. Abe.
Thank you, Lucy. Very good morning to you all. Thank you today for joining us this morning. We're launching our Regional Economic Outlook. I'm just coming from a session where we launched that. A few remarks from my end before perhaps attending to your questions. Sub-Saharan Africa, the economy continues to recover in terms of economic growth. This year, we're expecting growth to accelerate to 3.5% from 3% last year. But these regional average numbers mask quite a lot of difference in terms of outcomes across the region. Specifically, some 21 countries are expected to grow at 5% or more this year. And so, per capita income increases that are markedly larger than many countries in the rest of the world. And these economies that are growing fast tend to be the more diversified economies. Still, there are another set of countries, around 24, mainly resource-dependent economies that are facing sluggish growth in the near term and are seeing slower improvements in standards of livings. This group includes some of the larger economies in the region, the likes of Angola, Nigeria, and South Africa, which account for more than 50% of the region's output. External and domestic developments are having a bearing on the economic outlook. On the external front, perhaps the most important factors have been the volatility in global financial conditions, as well as volatility in commodity prices, which are posing a challenge for policymakers. Domestically, one pressure point remains rising public debt vulnerabilities. These are elevated in some countries and posing a challenge. The reason for the increase in debt levels tends to be very country-specific. For some, it is due to addressing their large infrastructure needs. In others, it's been the effect of the commodity price shock that hit countries between 2014 and 16. And yet in others, it's been pro-cyclical policies which have led to the marked increase in debt levels. Looking ahead, we see basically two broad implications for policies. First, in the fast-growing economies, the likes of Benin, Ethiopia, Ghana, Senegal, there is a need to hand over the growth, the reins of growth from the public to the private sector. In many of these countries, public investment has helped spur higher growth, while also, of course, translating into an increase in public debt levels. So there's a need to strike a better balance between public debt increase on the one hand and the continued investments that are needed in public investment. In the slower growing economies, the likes of, as I just mentioned, Angola, Nigeria, South Africa, there is a need to pursue reforms to facilitate economic diversification and address remaining economic imbalances. In many of these cases, private investment remains weak, and a strong focus is needed to address the constraints that are holding such investment back. One development that we are very hopeful will facilitate growth is increased trade integration in the region. We're very encouraged by the progress that's been made towards the African Continental Free Trade Area. Once completed, the trade agreement will establish a market of 1.2 billion people with a combined GDP of $2.5 trillion. The benefits could be substantial, particularly if countries tackle non-tariff bottlenecks to trade, including by investing in infrastructure, lowering logistical costs, and improving trade facilitation. What is interesting, we think, is that intra-regional exports in Africa are more diversified and have a higher technology content than Africa's exports to much the rest of the world. Just to give you a couple of numbers on this, 40% of intra-regional trade is accounted for by manufactured goods, whereas when the region exports to the rest of the world, 75% of such exports tend to be minerals, the likes of crude oil and other commodities. Still, one thing to note, of course, is that to ensure the benefits of intra-regional integration are shared by all, policymakers should be mindful of the adjustment costs that integration could entail and move swiftly to address those. In addition to these more medium-term challenges that I've been noting, we see, countries, of course, have been hit by significant shocks. Two such examples I want to highlight. I think the first is a security challenge. Overall, the conflict levels in the region tend to be much lower than in the 90s and even early 2000s. But countries in the Sahel and Lake Chad Basin are facing considerable security threats. In this regional economic outlook, we have done some work looking at the recent trends and the economic impact that conflicts are having. This is an issue of great concern, and we are discussing with country authorities how best we can minimize the diversion of resources away from much-needed development spending. Another example of the kind of shocks that policymakers have to contend with, of course, are weather-related shocks. As you know, Cyclone Idai has had a devastating impact in Southeast Africa, leading to the significant loss of life and damage. We're doing everything we can to support the countries that have been affected. Just to give an example, we have moved very rapidly to support Mozambique through a rapid credit facility. We expect the executive board to consider this request as soon as next week, within a month of the cyclone hitting Mozambique. In Zimbabwe, yesterday we announced a staff monitored program which will support the government's economic policies, and we're having extensive dialogue with authorities. And in Malawi, we are in discussions with authorities to provide additional support through the existing ECF arrangement we have with them. Before I end, I would like to stress that Sub-Saharan Africa remains a region of tremendous economic potential. And while the global environment is increasingly uncertain, there is much that the countries are doing and can do to sustain very high rates of growth, which we are certain will translate into continued improvements in development outcomes. I will now turn to raising any questions you have, and a copy of the report that we've just published will be available as you go outside. Thank you so much.
Yes, let me start here. Yes, please.
João Santarita from Voice of America. I have two questions related to Mozambique. You mentioned the credit facility because of the cyclone. I wonder if you could tell us how much are you looking at? And regarding Mozambique, some of the civil society organizations have said that Mozambique should not pay the debt to Credit Suisse. Some officials were involved in this corrupt dealing for the loans. I'd like to know what's your opinion about that, and also if you can tell us what's your opinion about the battle for the extradition of the former Minister of Finance, Manuel Chang, between the United States and Mozambique. And on Angola, if you could tell us what are the main priorities that you'd like to see the Angolan government implement. Thank you.
Thank you. So the rapid credit facility with Mozambique, I believe, is of the order of $120 million. And as I mentioned earlier, we're hoping to present this request to the executive board. We have sent the request to the executive board, and we hope the board will consider it as early as next week. With regards to outstanding debt that Mozambique has, as we have noted some time back, Mozambique's debt level had become unsustainable in the wake of the revelation that there was significant borrowing that hadn't been disclosed. What we've been calling basically is to find ways for the government to ensure that debt becomes sustainable. It's up to the government and the dialogue they're having with their creditors, of course, to find ways of ensuring that debt reverts back to sustainable levels. Much in the same way on the question of the judicial inquiry that's going on, it's beyond my area of competence and cannot comment. On Angola, we have a program with which we're supporting the government's adjustment efforts. Frankly, the program has been off to a very, very good start. The authorities are making very strong strides towards addressing macroeconomic imbalances that they've been confronting for the last couple of years. We've been very impressed by the extent and depth of the reforms that they've been engaged in. We think that going forward, one of the things that we need to do better, we need to strengthen, is introducing social protection programs to try and make sure that that the adjustment will be fairly progressive and avoid adverse effects on the poor in particular. We also are looking forward to completing the reforms that are needed to facilitate much more competition in product markets in Angola, which have tended to be closed. These kind of structural reforms we feel will be very important to spur growth. So we'll be working on those issues in the coming months.
Yes, let me take the one in the middle here. I'll get back to you.
Good morning. My name is Tamrat from Addis Fortune of Ethiopia. I have two questions. If you look at the report by Vera Songwe, who's the Executive Secretary of UNECA, she said for the Africa free trade area to succeed, African countries should diversify their exports. But if you look at the record since 1990, only 3 countries have succeeded in doing that. And do you agree that this is a kind of solution that will be working? Another specific question on Ethiopia. The IMF projected 7.7% GDP growth for 2019. But if you look at the country, there is internal political crisis, chaos, and growing conflict and uncertainty that erodes business confidence. And where do you think the source of growth comes from in a situation like this? Thank you.
Thank you. On the AFCTA, so, one of the striking things, as I just noted, about intra-Africa trade is that it tends to be much more in processed goods rather than natural resource exports. One reason for this, of course, is that countries quite a lot of countries tend to produce similar natural resource exports, and so they don't need to import them from another African country and will instead export them to the rest of the region. But with each other, they tend to exchange much more processed goods. I think, just to give you one example, a country I know well, Uganda. Uganda, when it's exporting to Rwanda, to DRC, to South Sudan, tends to export building materials, bottled water, other bottled drinks, maize flour that is processed, and the like. So what the AFCTA, we're very hopeful, will do is facilitate avenues for greater diversification, more wider markets in which countries can produce and export towards. So this is something which this is an assessment we very much share with we share the ECA's assessment, and our report confirms that this is one of the dimensions which will be important from the AFCTA. On Ethiopia, Ethiopia has been one of the fastest growing economies in the region over the last many years, of course. An important driver of this growth has been significant public investment. And as I noted earlier, this investment continues and is spurring growth. What we're looking for economies like Ethiopia, but also the likes of Kenya, Senegal, where public investment and infrastructure has been an important driver to growth, is to hand over the reins of growth from the public investment more towards facilitating private investment. And this handover of the reins of growth is, I think, the policy priority.
Let me take one question on this side of the room, and then I'll get to you guys. Yes.
My name is George Uyafe from Joy FM in Ghana, as well as Multi TV in Ghana. My question is, in your Economic Outlook report, you've projected that Ghana could be the fastest growing economy in Africa. The concern here is that for you, what's the advice to government to ensure that this growth comes along with creating jobs for the youth? And also, we've completed the program with the IMF. For you, what's the advice to government to ensure that we stay on track and maybe in 4 years or even 2 years' time, we don't come back to the fund again for another policy credibility or support or even program? Thank you.
So I think the jobs agenda is one not unique to Ghana. I think all our countries, all countries in the region, but frankly beyond the region also, have the challenge of needing to create well-paying jobs for the people, new job market entrants, and of course people wanting to switch jobs. So this is a broad agenda. What can countries do, and what can Ghana do specifically? I think continuing to make sure that you invest in human capital, I think, is very important. Investing in schools, investing in the health of the population, I think really continues to be a very important driver to to have people entering the job markets having the necessary skills, the necessary flexibility to be able to do the jobs of the future. Making sure that you don't have any distortions coming from the public sector in terms of macroeconomic aggregates, I think will also be a very important objective. Again, facilitating scope for private investment, identifying, as I noted earlier, tackling the constraints, the barriers through private investment will be very important. Helping hundreds of thousands and thousands of informal companies, finding ways for those companies to grow and enter into the formal sector, removing barriers, removing the burdens that they face in growing, access to credit. All of those kind of micro reforms are going to be very important for the jobs agenda, and making sure that this growth is labor intensive enough and absorbing enough, and creating enough jobs. On post IMF program policies in Ghana, I mean, we've seen a significant improvement in narrowing of the macroeconomic imbalances that was confronting the Ghanaian economy in 2014-15. I think staying on this course will be what is important, making sure that fiscal deficits remain manageable, making sure that the resources that are being borrowed continue to be used on projects of the highest rates of return, making sure that the calibration of monetary policy remains one that's consistent with keeping inflation at bay, the exchange rate at competitive levels. The kind of things that government has been pursuing over the last couple of years, and staying that course is what is important. I think, you have policymakers that know that very well. We like that the reforms that have been made to strengthen institutions, the new fiscal council that's coming into being. So making sure that these institutions remain robust, effective, and policies are continuing the direction that they've been in the last couple of years.
Let's go to this side of the room. Gentleman on the first row, please.
Thank you very much.
Yeah, it's on.
My name is Ima Uja. I work for Vanguard in Nigeria. Nigeria and I believe several other African countries have had to suffer because of the outflow of illicit funds. I want to know what kind of commitment can we have from the IMF in the effort to repatriate some of these funds? Thank you.
So just to be very clear, I think the front and center role, of course, for making sure that economic policies are appropriate, limiting and narrowing the scope for such illicit outflows remains the task for policymakers in our countries. From the IMF side, we, of course, provide a lot of policy advice. And more recently, we've also introduced governance and corruption a framework that will help improve governance and tackle corruption. Excuse me. Should the government be interested, of course, we have advice on how to strengthen public finance management frameworks, how to strengthen accountability institutions that we can offer and work with the government. Overall, I would say that, over the last couple of years, this is an area where we've seen the President Buhari's administration placing quite a bit of emphasis, and continuing to strengthen this is, I think, the task facing Nigeria.
Lady in the middle over there, please.
The mic is still there. Can you pass some?
Thank you. So my name is Fatuelika Maloshi from the Gambia Radio and Television Services. I just wanted to know your overall assessment of the Gambia, knowing that the country is trying to recover after a sharp growth slowdown in 2016. And it also went through a political impasse, most of you know, in that year. So a lot of things have changed, including the government. And so we do know that the government is trying to really re-strategize its policies, and the IMF also advised that they need to revisit their fiscal policies just so growth is stable and debt is sustainable. And so we've also seen that the government has taken more than half of its revenue to solving debt. And we've also seen a rise in taxation, especially in certain revenue-generating avenues, also on the private sector. So just wanted to know your overall assessment of the country in the coming years. Thank you.
Thank you. So Gambia, of course, has been going through a fairly difficult political transition. It's been a period of quite a bit of uncertainty, and after a very long period where there was very limited transparency in public accounts, we've moved to a period where there is a bit more transparency there, and we're happy to be supporting the government's reform efforts through a staff monitored program. We just agreed on a second staff monitored program recently with the government, and we hope that this will transition into us being able to provide financing going forward. One constraint on our ability to provide financing has indeed been the need to make sure that there is a fiscal path which strikes a healthy balance between continuing to make resources available for investment in health and education and infrastructure that the country needs much, versus avoiding an unsustainable debt situation. There's, I think, very encouraging progress on this front in recent weeks, and we hope to help the government continue to strike this healthy balance in the coming weeks.
Let me take the lady in white here, please.
Thank you. Is it? Okay, hello, I'm Helena from the Portuguese News Agency. I wanted to ask you about two Portuguese-speaking countries in Africa. In the first place, Angola, which has an extended fund facility agreed with the IMF. How is it going? Also, Angola had the visit of IMF mission very recently, and they were going to continue the works here in Washington. And the second question is about Guinea-Bissau. Also, overall assessment about this country, which is an underdeveloped country and very poor, and we'll have legislative elections. What is your overview for the next coming months for Guinea-Bissau?
So with respect to Angola, as I mentioned earlier, we've had an extended fund facility since last year, in which there are comprehensive reforms being pursued. Angola is at an inflection point in terms of the economic policy environment. They've been really hit very, very hard by the decline in commodity prices, of course, and have been adjusting to that over the last couple of years. The first set of adjustments the country has been doing really has been more by way of compressing spending, and rather than a more systematic way of doing the policy reforms. So the work of this EFF arrangement, the work of this EF, the program under the EFF, the reform program that the EFF is supporting, government's program, is trying to put a more orderly fiscal adjustment in place, also facilitate further further reforms in the monetary and exchange rate area, and also a lot of structural reforms. We're pleased with the progress that has been made so far, and we're encouraged with the progress that has been made so far, and I think that we hope that that will continue in the coming months. With Guinea-Bissau, as you noted, this is a program, this is a country which we've been supporting with a program. It's a fragile economy, faces a lot deeper developmental challenges. We continue to have dialogues with the government, including in improving the health of the financial sector, which we think is a very important policy priority at the moment. And we'll continue to work with them in the coming months also.
Let's take first row here. I'll be back.
Thank you. My name is Simon Ateba from Today News Africa here in Washington, D.C. The Trump administration is warning that the Chinese investment in Africa, while it's good for infrastructure, is also can turn out to become debt trap and end up with asset takeover. We have cases in Sri Lanka, especially because the loans from China end up in the hands of very corrupt government, unaccountable government. How big a threat is the Chinese investment and expansion in Africa? And finally, yesterday, the new World Bank president gave the statistic, the alarming statistic about Africa. He said by 2030, 9 out of 10 poor, extremely poor people in the world will be Africans, which is a bit surprising, seeing all the poor in Asia and in the US and in Europe. Is the IMF seeing the same thing? And finally, in terms of statistics, we see the IMF has 3.5% projection this year, and the World Bank has a different statistics. How does it work? Why do you have different statistics? How do you carry out? How do you get to it? Thank you.
Okay, a lot of questions there. First, on the debt issue, as I flagged earlier, in some countries, I think it's important to know that, with many policy challenges, and particularly for a region as heterogeneous, as diverse as Sub-Saharan Africa, it's very important to consider them in a country-specific context. So the reason why debt has gone up differs from country to country, and the sources of financing also tend to be country specific. Our advice, of course, always is to make sure that countries are striking a healthy balance between, on the one hand, continuing to address their development objectives, and second, avoiding debt sustainability concerns. In some cases, of course, this kind of debt problems can arise from borrowing from bilateral creditors, but in other cases, it comes from borrowing from commercial banks. Somebody asked me a question about Mozambique not so long ago, right? I mean, the issue with debt sustainability had arisen on the context of borrowing from commercial banks that were hidden in that case. So the issue of debt transparency is not unique to China, but also to all borrowing that our countries are undertaking. And what's important, again, is making sure that total borrowing levels remain consistent with debt servicing capacity. Failing to do that, of course, is very problematic. On the outlook for the region, in terms of addressing poverty rates, of course, this is exactly why we have this dialogue and these meetings with policymakers. The brunt of our work is to make sure that the region continues to grow as robustly as possible to create the millions of jobs that our economies need to avoid worse outcomes, particularly given the demographic challenges that the region faces. So this is exactly what policymakers, institutions like the IMF, World Bank are all engaged in, to make sure that we can help economies grow as robustly as possible to reduce existing poverty and avoid poverty levels deteriorating any further. So your last question was on statistic difference. I'm not sure what discrepancy you're talking about, frankly. Yeah, I mean, you know, I think the last numbers I saw from the World Bank for Sub-Saharan Africa was 3.6. Ours 3.5. The composition of Sub-Saharan Africa between the two institutions differs slightly. There are, you know, one or two countries more there than here. So those kind of things, or the timing when projections were made, often account for any marginal differences that there are.
Let's take the question here, please. You can just swap to the, yes.
Merci beaucoup. Moi, je parle français.
I'm going to speak French. Yves Laurent Goma, I come from Gabon.
Vous avez
In your presentation,
région. Malheureusement, vous n'avez rien dit sur l'Afrique centrale.
We're missing the microphone. The speaker's microphone is gone. The interpreter regrets. The interpreter regrets we have no microphone and cannot hear the speaker.
You know, in my opening remarks, I noted about the impact that the commodity price decline has had on some of the region's commodity exporters. 5 out of the 6 CEMAC countries, of course, are oil producers, and they have been hit very, very hard by the decline in oil prices that we saw in 2014 to 16. We are working with the countries to try and avert, you know, we moved very quickly to help countries avert a crisis, and you know, we have programs that we're supporting the authorities' endeavors with. As you noted, 4 out of the 6 countries we have programs with, that is Cameroon, Gabon, CAR, and Chad. And the efforts that countries have been making, these 4 countries, but also the reforms that the BEAC has been pursuing, and as well as really some efforts that Republic of Congo and Equatorial Guinea have done. What those have done is to stabilize the level of foreign exchange in the region and strengthen fiscal deficit and narrow fiscal deficits. There still remains quite a lot to do in terms of reforming the business environment in countries to spur growth, and the emphasis of our work and dialogue with authorities has now shifted a little bit more towards making sure that we have a business environment that is more conducive to private investment. So that's where we are in the dialogue and the programs. If authorities want further engagement with IMF, we're of course always ready to listen and see what we can do.
Questions on this side of the, let's start in the back with the lady, please. I'll come up to you.
Hi, my name is Leah Katung Baba Tunde from the Nigerian Television Authority, and I would like to take just a couple of questions. Now, you talked about creating jobs for the growing population of youth, and we have that scenario in Nigeria where a lot of people are graduating with no jobs waiting for them. So in line with the ERGP of the government, have you seen that impacting in creating jobs? And what is your general assessment of it so far from the annual meetings till now? Then I would also want to know the position of the IMF in terms of regional conflict as it affects development. We've seen clashes between the farmers, the herders, and it's not just restricted to Nigeria, it's moving into neighboring countries. We've also heard that some of these people move across border. So really, what is the impact to economic development in these countries having this peculiar crisis? Thank you.
Okay. On economic reforms, again, I think it's really important to see, first of all, recognize how deep the shock that the Nigerian economy was hit by when commodity prices declined, from oil prices declined from 100 or or more that was prevailing before 2014 to where they're at right now. That's been a really very severe shock and has had a tremendous impact on the economy. There's been adjustment to that shock, of course. In some cases, it's still ongoing. But we think that, the focus now has to shift, and this is where I think the GP was strong in terms of diversifying the economy. We welcome the efforts the government has been making to improve, to tackle corruption, to improve governance in the country. We very much welcome the emphasis on public investment. What remains, we think, in terms of priorities going forward, really is trying to make sure that government generates more resources that it can use to invest in health, in education, in further infrastructure. So tackling the revenue side of the equation is really what's really important. Nigeria has fairly low level of revenue to GDP ratio. And I think moving forward, right in the coming months and years, to address that will be very important. And I think, that investment in infrastructure, investment in health and education is exactly the kind of investment the government needs to make to facilitate more private sector growth, tackling other constraints on private sector to create the millions of jobs that Nigeria needs. On conflict, I think it's a very timely question. The regional economic outlook that we just put out has a chapter really looking at the impact of conflict on the region, on countries, on economic outcomes. So I urge you to look at that. It's to, suffice it to say that, of course, in the region, the level of conflict remains much, much lower in sub-Saharan Africa as a whole. The level of conflict remains much lower than it used to be, but we have seen an uptick in violence in the Sahel region in particular, but also in the Lake Chad Basin countries. Frankly, what's needed, of course, is addressing directly those the conflicts and minimizing the spillovers that they're having on the populations, but also it points to the need for our development policies to be much more inclusive, to try and address the poorest parts of our countries, the development challenges that face the poorest parts of our countries.
Let's take another question here, and we'll take one last in the back. Please, quickly.
Thank you. My name is Mataya Zokwe, and I work for the Guardian newspapers in Nigeria. My question is actually a follow-up to what my brother Teba had asked concerning the frightening prediction about poverty indication in Africa in the next 10 to 11 years. So the question is, the addition to the question actually is, if the African Department of IMF is actually doing something to, for instance, ask for debt reprieve for African states in this period, and whether there's also reforms in the ways your credits are being given and utilized. For instance, there is this general belief in Africa that when IMF, World Bank provide a loan, they create employment for their people with which the credit is used to finance, whereas living challenges and indebtedness for the people at the end of the day. So the Africans are collecting loan to finance, to create employment for developing economies. What is the African Department of IMF really doing to see that there is a change in this, so that monies for African countries can really work for them and attract value? Thank you.
So, look, the IMF's contribution to the work of policymakers in the region is not confined just to financing. if anything, by far the most important contribution we make is providing policy advice to the region. And we, of course, have policy dialogue with all 45 member countries of, sub-Saharan African countries on exactly the points that you made. How can governments, how can policymakers, how can societies, quite frankly, it's not just governments that are responsible, but broader stakeholders, including parliaments, private sector, CSOs, NGOs. What is the best way to, what are the challenges and what is the best way to address them? Our advice is country specific and revolve around, for example, on effective use of public resources. What is the best way of having a public finance management framework? What is the appropriate level of deficit governments can pursue to strike a healthy balance between, on the one hand, continuing to address development needs, second, avoiding debt. Public investment management is an area where we do quite a lot of work, how to prioritize, how to select the right type of projects. So I think, the contribution we make in countries like Nigeria is exactly in that area, providing the policy advice, because we don't have a lending program, for example. So that's how we help. In other countries still, we come in to support governments with resources, borrowing. I think the CEMAC example that the gentleman earlier raised as an example, in those cases, the countries were hit very hard by the decline in commodity prices. They lost fiscal revenue, they lost external revenue. So we provided financing to help them continue to spend, support investments in health, in education. Again, in these countries also we do quite a lot of work on the public finance issues I noted earlier, but also helping them strengthen the governance and governance frameworks, tackling corruption, making sure there's more transparency in public accounts. So this is the contribution that we are making.
Last question in the back, please.
Gentlemen. Yes. Sorry, my name is Suleiman Mustafa. I write for the Daily Graphic in Ghana. Ghana has just completed a financial sector cleanup that we are told that is going to ensure a solid financial system. Now the question is, how do you think this will impact, one, on the financial system of the country, two, to ensure growth, because already we are already seeing some job losses in the system. Thank you.
Okay, so, a healthy financial sector really is paramount in all our economies, particularly an economy like Ghana, which is a frontier market economy moving towards emerging market status, a financial sector which is healthy, which is vibrant, which provides financing for private sector, and above all is healthy, is really very important. If you want to think about it the other way, we've seen the kind of damage that banks failing, financial sectors failing can have globally. We just have to look back to the global financial crisis and the turmoil it caused in countries such as the United States and many European countries. So it's I cannot stress enough how important having a healthy financial sector is. Banks that are robustly capitalized are a source of strength for an economy, and so that's been the broad direction in which the financial sector cleanup in Ghana has been going in. Where it has entailed some job losses, of course, finding ways to minimize those will be important, but I think that tends to be very bank-specific issues. For the broader economy at large, I think the work that the government has been doing is very encouraging, and it needs to continue going forward. Thank you.
Thank you so very much, Mr. Embro Selassie. Thank you guys for coming. We'll see you again in October, I guess. Thank you.
Thank you. Thank you for coming.